Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. This indeed is the podcast that will help you learn a lot about investing in the hopes of making you smarter and in the hopes of helping you make a lot more money, which of course is a good thing. Before I get into our interview of the day, I have to start with our stock of the day. My stock of the day, surprise, surprise, is Nvidia. I mean, this is the most popular stock on Yahoo Finance, and I'm bringing it to light here today because it is shares of Nvidia down 5% from the record high that the stock hit earlier in the week. And that is in large part to a surprise warning from chip maker or chip play ASML. Really shocked the market, shocked all the investors in AI stocks with a warning on their forward outlook saying weakening demand in non-AI applications and also calling for a gradual recovery in demand. Nvidia didn't like that. Nvidia investors didn't like to hear that. AMD investors didn't like to hear that. But I want to point to this, guys, before I get to our interview subject of the day. You know, a recent note out of JP Morgan saying they met with the management team in Nvidia, and they're saying that the next generation Blackwell chip is ready to go into high volume production in the fourth quarter. That's the quarter we're in now, folks. And demand and yields look to be improving. And any production problems that Nvidia had a couple months ago with this Blackwell chip are done and dusted. So you have to start thinking about, is this Nvidia sell-off overdone? I'm not going to tell you yes or no. I do not pick stocks anymore. I just want to leave you thinking there remains a lot of fundamental positives to the Nvidia story. All right, enough Nvidia for the day. I could talk about that all day, but I want to talk about some monetary policy, some gold, Fed outlook, lots of things. And I will set this up as this. You know, we have not had one repeat guest on Opening Bid, but our next guest I felt was very important to bring back and continue the discussion we had a couple months ago. That is Judy Shelton, Senior Fellow at the Independent Institute. Judy, good to see you again. You know, since we last saw you in our studio, we're now on the NASDAQ. The NASDAQ team lets us come down here and do these amazing podcasts. Gold prices have gone through the roof. I mean, I guess it's a Judy Shelton rally, right?
I think it's a rally, but it may have more to do with Costco stocking gold. It's a very trustworthy company. And I think it might reflect a collective yearning among consumers for real money. But it is a phenomenon. I think in the last year, it's probably up over 40%.
So we've talked in the past that, and you're a gold expert, you've spent a lot of your career studying gold, what drives it, what doesn't drive it. What does it say that that Costco, a retailer known for selling meat, bulk goods, is essentially selling about $300 million a month in physical gold bars? I mean, what is the economic read-through to someone that has studied gold for many years?
Well, when I've studied gold, it's been in the context of historical monetary systems and how economic performance is affected by the underlying monetary foundation. So I don't look at it as an investment, but as more a reflection. And I think that people have had a bit of a shock in the last 2 or 3 years, seeing real inflation getting up as high as 9%. But say since January of 2021, they've seen the dollar lose 20% of its purchasing power. And I think for some investors who buy at Costco, maybe they're just being savvy. I mean, they are making a profit. Other people might be very prudent. They're diversifying their portfolio. But I think it also is reflecting this yearning for real money. Gold is kind of a surrogate for the real economy. And it represents commodities, but also that traditional role of money you can trust. It's a meaningful unit of account. It works across borders. It has universal value, and it's highly recognized. It's a store of value. It doesn't mean gold is going to increase in its dollar value, but it probably does. And I think that it reminds people at one time, our own system was based on a specific weight of gold. So to say that today the dollar should be as good as gold is to say, let's learn from historic systems because they did deliver some real benefits to people, including the right to convert at a pre-specified price your paper currency. That's what we're missing, is that accountability for our central bank, the Federal Reserve.
My view on gold is probably a lot simpler than yours. I was trained to view gold as one buys gold because they expect unrest at some future period of time. So I have that gold bar and I may need to use it to buy a loaf of bread. I mean, from an economic standpoint, do you see trouble ahead in the economy that would warrant going out and buying gold?
Well, I think the same people who are concerned about a sudden breakdown in civil obedience, kind of an apocalyptic scenario, do know that gold is seen as a medium of exchange automatically. It has that traditional role. I would say in a less hysterical way. I mean, I'm not saying these things won't happen, but let's say if we have a basic positive outlook for the geopolitical situation, we might nevertheless see gold as that safe haven that I think you're referring to, because hopefully we don't have to buy a loaf of bread with it, but it is a mainstay. In that sense, it's an alternative currency, a real currency that fulfills those functions of a medium of exchange. You could use it for transactions as basic as buying bread, but it also is a store of wealth, and it provides a unit of account if everyone is also using precious metals.
I really hope we don't have to use gold to buy loaves of bread because if we do, I mean, there's something that has gone really, really wrong. So let's switch a little bit to, and I should say this too, to Yahoo Finance community watching this on YouTube, watching on Yahoo Finance, please drop us a comment. If you're out there buying gold bars at Costco, love to know what you were thinking, putting your hard-earned money to go out there to a Costco or other places to buy gold, physical gold, gold stocks. Very curious. Drop us some comments in the section. So Judy, since you also last talked, the Fed has made a big shift on Fed policy, came out, cut rates by 50 basis points. But now there's talk that the Fed may skip a rate cut. Bigger picture thinking, is this a market that is still too dependent on what the Fed does?
Absolutely. Absolutely. I think the obsession with the Federal Reserve is a form of sickness in a way, because it detracts from entrepreneurial decisions. Instead of making investments based on where you see value, where you see a chance to employ your capital productively, it's too tempting to just arbitrage the utterances of Fed officials. I think what we saw when the Fed didn't lower rates in July, and then there were some alarming labor numbers, the Fed kind of panicked, and at the September decision did something very aggressive to go 8 straight Fed meetings at the highest rate in 22 years and leave the interest rates at that high rate, and then suddenly drop 50 basis points, only to have the labor numbers come out a lot more favorably within a few days. And now to see a slight uptick in the consumer price index, I think it made the Fed look slightly silly. And especially, in my opinion, because at the press conference, the chairman of the Fed, Jerome Powell, insisted that they didn't drop because there was anything wrong with the economy. He said labor markets were solid, growth was good. So the Fed, in a way, is disavowing its own framework, the paradigm it has been relying on. I even noticed one Fed governor, Chris Waller, said yesterday, we're going to be more cautious now because the economy isn't slowing as much as we hoped. Now, I think it's an odd outlook for our central bank to be taking. I don't think growth and productive employment is inflationary, but the Fed says nothing about fiscal. And we have a lot of spending, deficit spending going on in this economy that I think is fueling higher prices without increasing supply of products. And what you want to do is increase the supply of consumer goods and services. And that's how you meet demand, not by trying to cut off economic growth, which is the way the Fed approaches it.
So what should the Fed, in your view, be doing next year? Should they stay the course with these rate cuts, or, I mean, it seems really, it's confusing. I mean, we're looking at this, trying to have this discussion on handicapping what the Fed may or may not do. I don't know how the average investor could survive a moment like this.
I think the Fed does far too much. I think it's the ratcheting up and down that causes the problems. What you really want to do is bring back price signals. You want a free market to work in a way where the demand and the supply of loanable capital is determined organically. It's determined by the people who are actually in the economy, and not by a small committee of 12 FOMC members, the Federal Open Market Committee, which makes the monetary policy, meeting 8 times a year to decide what should be the most important price in an economy devoted to free market entrepreneurial endeavor. I mean, why would you fix the price, like in a central planning way, of that resource, financial capital? And I think we would be much better off if the Fed wasn't ratcheting up and down. Both candidates for president insist there will be inflation under their rival. So now the Fed is embarking on cutting rates. Is that just so it can raise them again?
Judy, before we go to break, I mean, is Chair Powell part of the problem here?
I think I don't want to blame him specifically. I don't want to doubt his motives, but I think having a structure where you imbue the chairman of the Fed with this sense of infallibility or omniscience is unhealthy. No one can know how to calibrate the amount of money and credit for a massive system, not just the United States, but really throughout the world. The only closed economy is the world economy, as my old mentor, Robert Mundell, Nobel Prize winner, always said. And I think to suggest that the members of the Fed have this kind of sacred responsibility where they insist that price stability is the responsibility of the Fed, and then there's no accountability when things go wrong. Nobody gets fired. No one who uses the dollar gets reimbursed for the loss of purchasing power. They're stuck trying to nag their supervisor for a cost of living increase. I think we deserve sound money. I hope there's a revolution in favor of sound money. The book Good as Gold, the subtitle is How to Unleash the Power of Sound Money. And I think we need to relink in some way the dollar to gold to establish a marker to say that we're going to get our fiscal and monetary house in order in the future, and to start to reintroduce that kind of discipline to suggest that a dollar really should be as reliable and dependable as gold has been for so long, including for the United States.
Judy, hang with us. We're going to go off for a quick break. We will continue the discussion on the other side of that break. All right, welcome back to Opening Bid. Having another fascinating conversation with Judy Shelton, Senior Fellow at the Independent Institute. Always enjoy catching up with Judy. So a recent interview by former President Trump, Judy, and the former president, I guess, doubled down on his comments that a president should have some form of say in Fed policy. He didn't come out and say outright he should be controlling Fed policy or whoever the president is, but he should have some comments. Like, what's your view on that?
Well, I think when people ask even prospective members of the Federal Reserve, well, would you listen to President Trump? It's such a loaded question, and it's kind of ridiculous. I mean, Chair Powell meets with Janet Yellen weekly for breakfast, and she's the Treasury Secretary who's working directly for the President of the United States. Should the Fed officials be hermetically sealed? Should they be allowed to meet with members of the administration? Powell also meets with Lael Brainerd. She's the chairman of the National Economic Council. She's the top economic advisor to President Biden. And it's just more than coincidental, I think, that both Janet Yellen and Lael Brainerd were the chair and the vice chair of the Federal Reserve. So until you're prepared to say that that the Fed chair refuses to take a phone call from the president of the country, then I think you're talking about a rogue agency. And these are unelected officials. I did notice when President Trump mentioned that at the Chicago Economic Club most recently, he made a point of saying, I can't order what the interest rate should be, but I think I have a right to express my opinion. And I feel like everyone I said this at my own hearing. Everyone has a right to be critical of Fed decisions. And I hope we're not going to begin to censor people, let alone the president, from expressing their opinion about monetary policy.
An interesting stat that I came across my desk. Let me read this one off for you, Judy. The Committee for a Responsible Budget estimates that policies floated by the former president would widen the federal deficit by 7.5 trillion over the next decade. What do you think about that?
Well, I am increasingly skeptical of expert estimates of such things. I don't think that those same experts saw that by reducing taxes and the regulatory burden that we would get increased revenues, very much in keeping with the theory of Arthur Laffer. I don't think that they anticipate all of the spending that government has been doing. When you look at tariffs, I'm not sure we know how to express how that will impact the economy, because in some ways, the whole idea is if people say now that something being imported is more expensive, they may choose not to buy it. Some of these assessments assume that everyone will just pay that higher price. But I think the idea is to say, unless someone's a monopoly supplier and there are no alternatives of goods comparable being manufactured in our own country, then you have a different sort of a problem, possibly a national security problem. But I can't believe that there wouldn't be potential producers of comparable goods and services within 20% who could then have a chance to establish their own market appeal. And I think people could switch. So I think we have to be careful in assessing the impact. But I do like the idea, frankly, if Elon Musk were to be brought into the government in a way of having more efficiency, possibly cutting down the size of civil service employees. Maybe we have too many people doing things that don't necessarily provide the service that is intended from government. I would like to see more efficiency in government. So I think all of those other factors need to be taken into account. And that's why I'm very distrustful of so-called assessments that I don't think understand in a dynamic way what a supply side oriented economic agenda would do to increase productive economic growth that could be very, very good for our country in terms of overall performance.
So you think what Elon is floating here is a potential good idea? Look, I'm not a political historian. I mean, has there even ever been a position like the one he has floated? And how fast do you think, let's say former president does get reelected, how fast can Elon Musk move within the tight confines of the U.S. government?
Oh, there has been a precedent. We've had commissions before looking to balance the budget, and that included spending initiatives to cut fraud and abuse and all of the words we normally apply to this. But I do think it would be unique. We have someone who has talked about establishing a Department of Government Efficiency, which happens to sound like Doge.
Doge. Coincidence? I think not.
Possibly not. He may be ahead of all of us, and he's a good marketing guy. But I do think that what he demonstrated when he bought Twitter and changed it to the X platform and immediately cut a huge number of employees. It's a harsh thing to do, but I also think that if you have layers of government bureaucracy that are impeding growth and making life difficult for entrepreneurs, who to me are the heroes of our economy, I think you could benefit. So I would like to see the size of government cut, but in a thoughtful way. It's not a matter of eliminating all regulations. It's a matter of subjecting them to a cost-benefit analysis. And I think that would be key and possibly very powerful.
Since we last spoke, Judy, we have gotten more details on Vice President Kamala Harris's economic plan. As you have unpacked that or studied it, is there anything in there that you think would benefit the U.S. economy, and to what extent would it benefit?
Well, I noticed that she just copied the idea of no taxes on tips. I guess tips for me do represent the closest link between performance and merit and compensation. And I think it's important to strengthen that link between effort and reward. But her other programs really leave me cold. I think accusing companies of price gouging is just the last refuge of a scoundrel. The inflation is not caused by the business, it's not caused by labor, it's caused by government. And so I think it's a real cop out to then say these are greedy corporations. I resent even that insinuation. So I'm against that. I'm against handing out money to be a first-time purchaser of a home. I'm very sympathetic, especially to younger people who would like to start acquiring financial assets. But just giving away money or even to businesses. She's announced a program oriented toward Black Americans. I think that's just an anti-American idea to give government rewards based on skin color or gender. I find it very distasteful. So I don't like the giveaway programs. I think she called them loans that could be forgiven. I don't like forgiving student debt. I'm sympathetic to students who have accumulated it, but I think you have to be responsible for your decisions. And there are plenty of people who didn't go to the expensive college or get that student loan who are paying the price, but they're also earning a living, and they shouldn't have to be paying for the decisions of others.
Judy, real quick, lastly, what's your economic outlook for next year? I mean, do you see things steady as she goes?
I have to say, I think it's very dependent on how this election turns out. Mm-hmm. I think that the country could be dynamic, could be successful. I think that we could be a beacon of hope to the world. I just got back the day before yesterday from a trip that took me to India, but also to France. And I talked with people who really want the United States to handle its issues with excessive debt, to handle the problem of high inflation and high interest rates, and having government debt eat up all the capital. And they say we all need economic growth. They're looking to us to kind of reprioritize the private sector and to elevate the individuals who are working in the economy above the government officials who rule over them.
Sure. Fascinating discussion, as always. I should mention, Judy, you were the first one to commit to the big Yahoo Finance Invest Conference coming up on November 12th in New York City. I mean, we have an amazing lineup of guests. Of course, Judy Shelton, Apollo co-founder and CEO Mark Rowan. Of course, Apollo is the parent company of Yahoo Finance. Bank of America CEO Brian Moynihan, Neil Kashkar, Minneapolis Fed president. So lots of just amazing people coming up on stage. Looking forward to seeing you there. Judy, we'll talk to you soon. Judy Shelton, Senior Fellow at the Independent Institute. We'll talk to you soon.
Thanks, Brian. Great to be with you.
All right. Likewise. Thank you for coming on. All right. That's it for the latest episode of Opening Bid. Please like, subscribe, hit us with those 5-star ratings on Spotify. Wherever you find us, just give us some love. We'll talk to you soon.